Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, April 15, 2010. Let's start today's session with a look at the euro-dollar pair, where we saw the euro slide overnight as we had pressure on Greek bonds yet again. The extra yield that investors demand to hold 10-year Greek bonds instead of the benchmark German bonds rose to 4.27 percentage points or 427 basis points. There was increased speculation that Greece would have to go ahead and trigger its aid package with the EU and the IMF after a meeting next Monday with officials from those institutions and the ECB. Following the selling and European session, perhaps that news of the Monday meeting and the fact that Greece is looking more likely to trigger its aid package may have helped to revive the euro and had some bids here at the 1.3520, between the 1.3520 and the 1.3550 level. We did move below 1.36, which was the support turn resistance level that we consolidated around earlier in the week, but now we've fallen below that level to test 1.3520. We'll see if the fade of this down move in New York trading falters, and if we have a further downswing, perhaps to close the gap we had to start the week and to test the 1.35 area, which would also be our 200 period moving average in this 1 hour time frame. Turning to the pound-dollar pair, we saw the pound rally from its overnight decline and test the 1.55 area, though was unable to broach that resistance after doing so during the Asian session. We hit an intraday high at 1.5522 after we broke above our resistance for this week at 1.55. We tested the 1.54 area in New York trading, and that could also coincide with this upward sloping short-term support level. So we did find support here, and the pair managed to rally, testing 1.55. The pound was supported as we had a poll showing that the opposition Conservatives' lead over the Labour Party widened, which eased concerns that next month's election will produce a government too weak to cut the budget deficit. So far the pound has been able to manage to hold on to its gains it's seen during this week above the 1.54 level. The dollar-yen pair continued its choppy trading of late as it remains within a range between 92.80 and 93.75. The dollar was pressured in New York trading following a weaker than expected jobs data report, which we will get to after our market highlights. The 5-day rally in U.S. stocks saw its momentum dented, and U.S. Treasury yields erased earlier gains, which is important for this pair. We continue to see trading that represents a lack of direction in this pair, and it's important to see which way we break out of this consolidation zone when we do. In a look at one of our growth-linked and commodity-linked currency pairs, the Australian dollar US dollar, we saw that the Aussie slid overnight, falling from the 0.9360 level to find support at 0.9308. Again, we had the increased risk aversion in the European session over Greece, but we did have some support in the New York session as risk appetite turned around somewhat. For Australia, the big news was coming out of China, as we had GDP figures which showed an 11.9% gain in the fourth quarter from a year ago in the economy. However, we also had China take forceful steps in order to try and cool its housing bubble. China's cabinet raised minimum mortgage rates and down payment ratios for some home purchases. These steps by China to cool its economy may cut into demand for Australian exports. Still, the Aussie did bounce up off its 50-period moving average and then use that moving average as support, though we did just consolidate in New York around this 93.25 area. We also have managed to hold this 0.93 level as the pair breached that level in yesterday's session. In our last market highlight, let's take a look at the US dollar Canadian dollar pair, which also moved in favor of the greenback as the 0.9960 level provided support overnight, and the pair moved back above the parity level in mid-New York trading. That returned us to our open from yesterday's session, and we'll see if this level now begins to act a little bit as resistance. In mid-afternoon New York trading, we did see the pair move even higher than yesterday's high as we broke above our 100 and 200 period moving averages. Now we do have resistance trend lines setting up. If we connect our highs, our recent highs, one would look like that, and a second pair, if we connect our closer, our more recent highs, would put us at the 1.00 28 area as our next level of support. So we could see some resistance here, followed by the 1.0050 level. Now that we're taking a look at our market highlights, let's take a look at U.S. fundamental data from today. First up, jobless claims for the week ending April 10th rose by 24,000 to 480,000 from the previous week's 460,000. This was a much worse result than expectations, which had claims falling to 439,000. Also, continuing claims for the week ending April 3rd rose to 4.64 million. A Labor Department spokesman said the rise in claims was due to administrative factors reflecting volatility around Easter than economic reasons, but today's result does continue a recent string of higher claims. The long-term trend of jobless claims has stalled since hitting the 450,000 area here, and it's important that that claims fall below this level to continue showing sustained job growth in the economy. Today's report also means that there's still some reluctance among companies to hire and that the improvement in the labor market will take some time to unfold. Moving along, we had industrial production data for the month of March, which showed a smaller than expected 0.1% increase in the headline figure. But if we look deeper into the data, we see that much of the reason for the weaker figure was a rather sharp drop in utility use, as we see that it dropped 6.4% during the month. If we look at only manufacturing, we see that manufacturing output was actually up 0.9%, which was close to the originally estimated 0.8% increase for the headline figure. So even though the headline figure was weaker than expected, we should take away from this report that the manufacturing sector continues to perform well. We had two releases confirming that sentiment. The Empire Manufacturing Index for the month of April jumped to 31.9 from 22.9 in March. Expectations had the index rising 24. Also, the Philly Fed Manufacturing Index for April rose to 20.2 from 18.9 the previous month, and that too was higher than expectations. In the Empire Index, we had general business conditions rise 9 points, while new orders and shipments advanced as well, plus inventories index climbed to a record high. The chart on the right does not have the Philly Fed Index for today, but we can see that it did increase slightly compared to the previous month. So we could see that the manufacturing within these two regions has been rather strong in the first quarter, and that should continue to spearhead the recovery in the manufacturing sector. Finally, we had data on foreign purchases of long-term securities, such as U.S. Treasuries, with total holdings of equities, notes, and bonds increasing a net $47 billion in February, which was up from the $15 billion increase we saw in January. Including short-term securities, foreigners bought a net $9 billion compared with sales of $10.2 billion a month earlier. China continued selling U.S. Treasuries for the fourth straight month, but there wasn't that much in the report to show a sharp turn away from dollar assets. Financial market analysts consider the monthly data from the Treasury Department to be a significant but imprecise gauge of how easily the U.S. can finance its trade deficit. So overall, we had some mixed data as we had a weak jobs report, but the manufacturing reports with our market highlights and fundamental data out of the way, let's take a look at the fundamental docket that will wrap up the week in the Forex markets. Overnight, we get data from Switzerland on its producer prices, while the Eurozone will release data on trade balance and its final version of March's consumer prices. Tomorrow in the US, we get data on housing starts and building permits, as well as the UMich consumer sentiment. In Canada, we get data on manufacturing shipments, as well as motor vehicle sales. And that will do it for today's broadcast. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching and wish you good trading.